Ever feel like you're drowning in information, especially with something like crypto? You just want someone to,
No.
cut through the
Yeah,
noise.
find the actual signal.
Exactly. Well, that's what we're doing today. We're diving deep into crypto trading using Glen Goodman's The Crypto Trader's Essential Guide as our map.
It's a really practical book.
Totally. Our goal here is to pull out the absolute key stuff for you. Maybe you're just crypto curious, maybe you need to get up to speed fast, whatever it is.
And Goodman's approach is interesting because it's not just click here, buy this.
Right. It's this blend of how-to trading advice, but also like the psychology behind it. He's really open about his own journey, mistakes and all.
Which is refreshing.
It is. He says, look, anyone can make money trading Bitcoin and stuff, but then he hits you with some pretty serious warnings straight away.
Yeah, and I think one of the first big things he tackles is that emotional side, right? The hype cycle.
Oh yeah, the FOMO, that fear of missing out. It's so real, isn't it?
It really is. And Goodman connects it to how crowds behave, how that herd instinct can be just terrible for your trading decisions.
You see prices going wild, everyone seems to be buying. That urge to jump in is almost like physical.
Yeah.
He talks about the 2017 bull run. I bet that was intense.
Wild West stuff.
So what's the big danger he points out about letting FOMO drive things?
Well, he puts it pretty bluntly. He says something like, the herd will always be late to the party. By the time they buy in, it's usually time to sell. And in crypto, this is amplified, Things move so fast.
Yeah.
That herd is often fueled by stuff going viral on social media. So by the time you see it trending everywhere...
The big move's probably already happened. You're buying the top.
Exactly.
Yeah.
You're buying peak excitement, not necessarily value. The hype itself is almost a warning sign, a bubble indicator.
Okay, so step one is mastering that mental game.
Yeah.
Don't follow the herd. Watch out for the hype. But even with the right mindset, you need to know the basics of the crypto world itself. What's his essential rundown?
He keeps it pretty clear. Bitcoin, the altcoins, what blockchain actually is, how exchanges work, and crucially, wallets.
Wallets are key.
Definitely. His big tips there are really research a coin before you even think about investing because so much out there is just speculation.
Right.
And if you're holding long-term, use a cold wallet. Get it offline for security.
Like a hardware wallet, that little USB thing.
Precisely. Think of it like a vault. Much safer than leaving your crypto on an exchange, which is like a hot wallet, always online, more vulnerable. It's fundamental security practice.
Okay, got it. What really grabbed me, though, was his honesty about his own path. Turning, 3,000 pounds into 100,000 pounds?
Yeah, quite the journey.
But he doesn't just brag. He talks about making emotional trades, trading way too much, not having discipline.
The classic mistakes.
It feels almost backwards. He says his success came when he started trading less, sticking to rules, focusing on not losing money. I really appreciated that honesty.
Yeah, it really shifts the focus, doesn't it? It's not about never messing up. It's about how you handle the mistakes, how you learn.
Totally.
And that applies everywhere, really. Any complex skill, sport, whatever. Discipline, learning from failure, that's the core. Goodman's story just highlights how crucial self-correction is. You spot the pattern in your mistakes, you put rules in place.
Right. So get the mindset right, understand the basics, learn from mistakes. Then comes the actual how-to. He gets into the practical side of buying and selling.
Yeah, the nuts and bolts. Choosing an exchange, getting your money in. But one really key practical tip he hammers home is using limit orders.
Okay, limit orders instead of
market orders. So a market order is basically saying buy it now, whatever the price is.
which can bite you in crypto, right? Prices jump around.
Exactly, that's slippage. You might pay more or get less crypto than you expected. A limit order says buy it, but only at this specific price or better.
Ah, so you're in control. No nasty surprises.
Much more control. Protects you from those sudden swings.
That makes sense. Okay, and then his actual strategy for making money, he calls it trend following.
Yeah, trend following. Basically, you're not trying to be a hero and guess the absolute bottom of a price drop.
Or catch a falling knife, as they say.
Right. Instead, you wait for the market to show its hand. You wait for a clear uptrend to establish itself, usually confirmed by breaking a key price level, ideally with lots of buying volume coming in.
So you're jumping on board once the train is already moving in the right direction.
Pretty much. He prefers those confirmed moves because statistically, they're more likely to continue. You're riding momentum that's already proven itself rather than betting on something that might happen.
Okay, that sounds disciplined. But how do you pick which trend to follow? There are thousands of coins. How do you choose the right target?
That's crucial. He makes a big distinction between projects that actually do something, that have real utility and solid fundamentals, versus the meme coins, the ones that are just hype, pumped on social media with nothing really underneath.
Gotcha. So he has a checklist.
He does. Pretty straightforward stuff, but easily missed in the excitement. Who's actually behind this project? What problem is it trying to solve? Is it even listed on reputable exchanges?
Seems basic, but I can see how people skip that when something's mooning.
Absolutely. The biggest mistake is just jumping in based on hype or a tip. If you can't answer those basic who, what, where questions, you're gambling, not investing.
Okay, so you've picked a potential target using the fundamentals. Then comes reading the charts, which sounds pretty complex for most people.
It can seem daunting, but Goodman breaks down the basics. Things like support and resistance levels. Think of them like invisible floors and ceilings where the price often bounces. And trend lines to see the general direction, up or down. Plus, volume analysis, seeing how much trading activity is behind a price move. Is it real interest or just noise?
Right.
His quick guide basically says, trend is your friend. Trade with the market direction, and wait for those breakouts, price moving clearly past the level, but make sure there's strong volume behind it.
So a decisive move backed by real activity. What's the signal?
That's a much stronger signal, yeah. But he also stresses it's not only about the charts. You still need to look at the fundamentals.
Okay, so beyond the squiggly lines on the screen.
Right. What's the coin's actual use case? Who's the team? What's their plan, their roadmap? And the tokenomics, how the coin works. Is it inflationary? How is it distributed?
What were the red flags there?
Look for real developer activity, a clear purpose. Avoid coins with, say, an infinite supply, or ones where the community seems dead or disengaged. Those often don't last.
Makes sense. So you've done all this homework, picked your coin, waited for the signal. Now you actually make the trade. He gives examples, right?
Yeah, he walks through some actual trades entry, why he entered, how he got out. The core lesson he keeps coming back to is patience plus planning, profits.
And getting out is just as important as getting in, maybe more so.
Definitely. He says most people fail because they don't know when to sell, they hold on too long, or panic sell too early.
So what's his rule for selling?
It's disciplined. Use stop losses, automatic sell orders if the price drops to a preset level. Protects your downside.
Limit the damage.
Exactly. And trailing exits, these let you lock in profits as the price goes up, but automatically sell if the trend reverses significantly. The key is exit based on the trend breaking, based on your plan, not based on fear or greed kicking in.
Easier said than done when you're watching the screen.
Oh, absolutely. The discipline is tough. And speaking of discipline, there's the crucial question of how much to risk on each trade.
Right, position sizing.
Yeah, and this comes back to risk management being paramount. His rule is super clear. Never risk more than 1% or 2% of your total trading capital on any single trade. Max.
Wow, only 1-2%. That seems small.
It seems small, but it's incredibly protective. It means even if you have a string of losses, which happens, no single trade can blow up your account. You survive, you learn, you stay in the game. It's about capital preservation above all else.
That actually makes a ton of sense. Survival first. He also mentioned short selling betting on the price going down.
Yeah.
Sounds risky.
It is, especially in crypto. He explains how it works, but he's pretty cautious about recommending it, particularly for near traders.
What's the main warning?
He puts it starkly, don't short in a bull market, you'll get crushed. Because crypto can have these sudden, massive rallies out of nowhere. Betting against that momentum is playing with fire.
Okay, so maybe leave shorting to the pros, or at least be extremely careful. We've covered a lot of the mechanics, strategy, risk, but Goodman keeps circling back to something else, doesn't he? Psychology.
Absolutely. He really drives home this idea. Your mind is your worst enemy and best weapon. It's maybe the most critical piece.
How so?
He talks a lot about self-awareness, about keeping a trading journal, not just what you traded, but why, and how you were feeling before and after.
Tracking your mental state.
Exactly. And the huge importance of emotional control. His advice is simple but hard. If you're angry, stressed, euphoric, whatever, just don't trade. Step away.
Because you'll make bad decisions.
You'll almost certainly deviate from your plan. It connects to, well, success in anything complex, right? Sports, business. Mastering your own emotions is often the key differentiator.
Yeah, it really brings it back to the person making the trades, not just the market itself. He frames trading as a craft, something you build, not just the lottery ticket.
Precisely. It's not a get-rich-quick button. He argues that trading can offer freedom and wealth, but only if you treat it seriously, with a solid plan, consistency, and that deep self-understanding. It's about building a skill, not just chasing luck.
That feels like a really important takeaway. Okay, so let's try and boil this down. If we were to create the ultimate cheat sheet from Goodman's guide for you, the listener, what would the core rules be?
Okay, let's see. For buying, wait for those breakouts, make sure there's strong volume, don't chase.
For selling, use stop losses religiously, use trailing exits to lock in profits, protect that capital.
Coin selection, focus on fundamentals, real utility, good team. Avoid pure hype, do your own research.
Risk management, the big one. Never ever risk more than 1–2% of your capital on one trade.
Tools, learn to read basic chart support, resistance, trend lines. Volume is key. Trend is your friend.
Emotional control, keep a journal. Track your mindset. If you're emotional, step back. Don't trade tilted.
And the goal for long-term wealth. Compound your wins steadily and focus intensely on avoiding those big damaging losses.
That's a pretty solid framework. It covers a lot of ground.
It really does. It shows the depth needed.
Definitely. And it leaves us with a final thought, maybe something to chew on. Goodman's guide really shows that cracking crypto trading isn't just about markets or charts. Maybe even more than that, it's about understanding yourself.
Self-knowledge, discipline.
Exactly. So think about that. This idea of mastering your emotions, sticking to a plan even when it's hard. How could applying that kind of rigorous discipline change things in other challenging parts of your life, way beyond just trading?